I think investors want to obviously consider risk, but no, don't put that too far in front of you. As we've seen in the last few quarters in Europe and also in the U.S., earnings have been way better than expected. I think investors really need to sort of put away the fears a bit and focus on growth and earnings. It is a new world order, is what we call it, and monetary policy in Europe is much more stimulative than it is in the U.S. So we think Europe is really attractive.
What about specific industries or stocks? What are you looking out for?
Well, I think that's where you really want to be careful, right? If you're looking at fiscal and monetary stimulus in Europe, which is what we see in significance, much more than what we've seen in the last 10 years, the sectors you're going to look for instance, are the banks. The financials are a really great place to be as rates come down and productivity growth with AI continues to increase. The banks should be a great place to be. I think the industrial sector absolutely would be a wonderful place to be as infrastructure builds out throughout Europe. And of course, we have to play the AI. This is a revolution and evolution in AI, and there's lots of great opportunities to do that in technology stocks here in Europe, but also in companies that are related to the AI, for instance, as the energies play. We need more electricity to drive crypto, AI, and all of these things. So lots of opportunities, and valuations are compelling.
What's going to be the next catalyst? Because, certainly all those things that you just described are valid. They have merit. They're appealing here. But they're also pretty well understood now by the market. And we've seen a lot of the positivity play out in some of these sectors, in industrials, in banks already year to date.
I think people think this is, the rally has ended. And I have to remind them, as a global investor, most investors around the world are under allocated to Europe. And I think the next catalyst, to be honest with you, is valuations are so cheap, earnings are going to continue to be well, and you've got a lot of money that needs to come back to Europe. I think over the next few months, you're going to get FOMO by a lot of big institutional global managers who are under allocated to Europe. This could go on for multi-years in our view, and with below valuations, good earnings, you've got a lot of money coming after us. This could be one of those multi-year rallies where the foreign stocks do way better than our U.S. stocks back at home.